Stop scrolling for just a moment, because what I'm about to share could completely change the way you look at gold, silver, and what might happen next in the financial markets. For months, everything felt predictable. Gold would move, silver would follow, the dollar would react, bonds would adjust, and traders felt like they understood the rhythm. But something has shifted. The pattern that guided investors for so long has started to break. Gold pushing toward $5,000, silver eyeing 78. And this Friday could be the trigger that confirms whether this move is just noise or the beginning of something much bigger. Before we go deeper, take one quick second to like this video and subscribe to Safe Haven Wealth. It truly helps the channel grow, and it tells me you want more calm, clear updates about gold, silver, and the global economy. If protecting your wealth matters to you, you're in the right place. Now, let's talk about what's really happening. For a long time, gold and silver moved inside a structured pattern. When inflation data came in hot, gold reacted immediately. When the Federal Reserve hinted at rate cuts, silver moved even faster. When the dollar strengthened, metals cooled off. It wasn't random, it was a rhythm built on expectations. Investors learned to trade that rhythm, analysts built forecasts around that rhythm. But recently, gold has been rising even when the dollar stays firm. Silver has been climbing without waiting for clear confirmation from economic data. That behavior is different. And when markets behave differently, smart investors pay attention. Think about this carefully. Markets do not change character without a reason. When an asset stops responding the way it used to, it usually means bigger forces are at work behind the scenes. Large institutions often position themselves early. They don't wait for headlines. They don't wait for social media to confirm the move. They act quietly before the crowd understands what's happening. Gold moving toward $5,000 might sound extreme to some people. Many will say it's unrealistic. They'll call it hype. But history tells a different story. Every major financial reset pushed gold far beyond what most people believed was possible at the time. During periods of high inflation, currency instability, or loss of trust in financial systems, gold doesn't move slowly. It accelerates. It reflects fear, uncertainty, and a search for stability. Silver is even more interesting right now. Unlike gold, silver has a dual role. It is both a monetary metal and an industrial metal. It is used in solar panels, electronics, electric vehicles, medical technology, and advanced manufacturing. That means silver benefits from economic growth and from financial fear at the same time. And because the silver market is much smaller than the gold market, it can move much faster once momentum builds. When silver breaks resistance, it doesn't drift higher. It runs. That's why a move toward $78 is not impossible if conditions align. So, what exactly changed? First, central banks around the world have been increasing their gold reserves. They are not doing this slowly. They are doing it consistently. When institutions that control monetary policy begin stacking gold, that sends a message. They may not say it publicly, but their actions suggest they are preparing for uncertainty in currency systems. Second, the bond market has been unstable. Yields are moving in unexpected ways. Investors are unsure about the timing of rate cuts. Inflation has cooled from its peak, but it is not fully under control. Every time markets expect calm, a new surprise appears. This creates pressure under the surface, and that pressure often supports precious metals. Third, geopolitical tension continues to rise. Trade disputes, global conflicts, shifting alliances, and currency competition all add uncertainty to the global system. Gold thrives in uncertainty. Silver benefits when both industrial demand and financial anxiety increase together. Now, let's focus on this Friday, because timing matters. Major economic data is scheduled for release. It could involve inflation numbers, employment data, or signals from policymakers. Markets are positioned carefully right now. When positioning becomes tight and expectations lean too heavily in one direction, even a small surprise can trigger a large move. If the data shows economic weakness, gold could spike quickly as investors seek safety. If inflation remains sticky, silver could surge as traders price in longer-term currency pressure. If the dollar drops sharply, metals may break key resistance levels fast. But here's the deeper point. Even if Friday brings short-term volatility, the bigger story is about long-term trust. Investors are quietly asking bigger questions. Can governments manage rising debt levels? Can central banks control inflation without damaging growth? Will the dollar remain as strong as it has been for decades? When those questions start entering mainstream discussion, hard assets gain attention. Imagine you're managing billions of dollars. You see national debt climbing. You see political division increasing. You see global trade shifting slowly away from reliance on a single dominant currency. Would you wait until gold reaches $5,000 to act, or would you begin building exposure early while prices are still debated? This is how institutional thinking works. It is forward-looking. It focuses on risk management, not just short-term profit. Another factor worth watching is the gold-to-silver ratio. When this ratio reaches extreme levels and begins to compress, silver historically outperforms gold. That means if gold continues rising steadily, silver could accelerate even faster. We've seen this dynamic before during previous commodity cycles. Of course, no market moves in a straight line. There will be pullbacks. There will be sharp drops designed to shake out emotional traders. That is normal. Strong trends often include temporary corrections. The key difference is mindset. Short-term traders react emotionally. Long-term investors focus on fundamentals. Ask yourself this honestly. If gold were to reach $5,000 in the coming years, what would that signal about inflation and currency confidence? Gold at that level would not simply represent a price milestone. It would reflect deep structural changes in the financial system, and silver at $78 would signal strong industrial demand combined with monetary pressure. But supply dynamics also matter. Mining production cannot expand overnight. It takes years to develop new projects. Environmental regulations, rising costs, and political risk slow expansion. Meanwhile, demand from technology sectors continues growing. When supply growth is limited and demand trends higher over time, prices eventually adjust. At Safe Haven Wealth, the goal is not to create fear, it's to create awareness. Financial markets reward preparation. They reward patience. They reward discipline. Whether gold reaches 5,000 or silver reaches 78 next year or several years from now, the real question is whether investors understand the bigger picture early enough to position wisely. As Friday approaches, watch not only the data, but the reaction. Sometimes markets reveal their true direction through how they respond to news. If gold rises even when the dollar is strong, that's a signal of underlying strength. If silver holds gains despite mixed headlines, that's resilience. Price behavior often tells the truth before commentators do. Major moves rarely begin with fireworks. They begin quietly. A resistance level cracks. Volume increases slightly. Momentum builds slowly. Then, suddenly, everyone notices. By then, early positioning matters. If you've stayed with me this far, you're clearly serious about understanding what's happening. I'd love to hear your view. Do you believe gold can reach $5,000? Do you think silver can move to 78? Or do you see a completely different scenario unfolding after Friday's data? Share your thoughts in the comments below. Your perspective matters, and I read them carefully. And if this analysis gave you clarity, consider sharing this video with someone who is thinking about protecting their savings. Conversations about wealth protection are becoming more important every year. The pattern has shifted. Pressure is building. Friday could bring volatility, but the longer-term story may already be unfolding step by step. Stay calm, stay informed, stay prepared. This is Safe Haven Wealth, and together we will continue watching every move in gold, silver, and the global financial system, one signal at a time.